Hey everyone, welcome to the weekly review. Last week we just went sideways and barely moved higher, but I think we had a closing high, a closing new all-time high, just barely. We have a bearish divergence on that new all-time high, a brief one. This is the correlation with the 2018 bottom, and I also put in a channel that basically connects all the bottoms. We have a connection here at the high here and this card pretty much lines up with the target of hitting like 6700 somewhere towards the end of the year. Could be sooner, like, but the target would be lower as well. We shall see. Now, on the breadth front, things are confirming this divergence here. So we made a new high on a bearish divergence. This looks to be curling down and potentially do a bearish crossover as well. This is McLaren oscillator, which confirms also that we had a new high on a bearish divergence. Something similar to what happened here, or something similar to what happened here. Uh, and things have been looking this bearish for a while now, but we haven't really seen a substantial move down, mostly due to the way the markets kind of rotated. Like whenever we had tech being weak, we had IWM and DIA being strong, and vice versa. For example, on Friday when IWM was weak, we had Qs having relative strength only minus 0.23, while IWM was minus 138. And this tag team between who is weak and who is strong led to basically no correction so far, even though the conditions were there. Last week we also had this. I'll switch to VIX because VIX is the one I use this for. This is the Gorgon indicator. It just prints a red dot when it triggers. And we had a trigger on Wednesday, last Wednesday, and another one that's happening today. Keep in mind that this is still in progress, so it might go away by end of day. Only the closing matters. We'll see if it sticks around. But generally, this Gorgon indicator predicts fairly well when a significant big spike is coming our way. We had one here. We had generally when you get multiple prints within the same time frame, within a couple of days or up to weeks, it counts as a single signal. Not all of them are super huge. Like for example, we had this one here. We had a big spike of like 20%, but it wasn't. It didn't go to 60 or 80. Or here as well, like this was VIX in an uptrend, like making higher lows, eventually led to this spike here. But there are other times where it's a pretty good bottom finder. Like for example here, like here, this I would call this a single cluster. This one was a triple cluster that was a perfect bottom. This one was a perfect bottom as a single one. Here as well, before it popped, here before a pop, here before a pop, and so on. Here uh, again, it's a pretty good indicator, and we have two prints that are foreshadowing a potential move up. Now, because of the way the rotations have been happening, and the fact that we hadn't had a synced drop, this we can get a big spike, like a mid one. Let's say, let's go find the comparison. Let's say like this here, we are here and we have a pop here to like this one was from 11 something to 15, so still like 20% plus, and in our case 20% plus even 30% would put us like 23. So we can still get a 20 to 30% VIX pop, and this would prove to be a good signal. But because the market rotates instead of actually dropping for real, this could mean just like a 1%, 2% drop in SPY. And that's all. Because maybe Qs outperform or maybe IWM outperforms and so on. And it's just a rotation drop. And VIX pops a lot. But this type of move is not reflected in SPY, and we get like 1 to 3% down in SPY and 20 to 30% up in VIX, and then it just fades and we go back down. I think this is likely what is going to happen next. And this week we have reason for this something like this to happen. Earnings season starts this week, tomorrow and forth with JP Morgan. A couple of banks are first always. Then we have ASML on Wednesday, TSMC on Thursday, Netflix as well. We have Pepsi, 3M from the bigger names. You can see them here. So on top of this, we have CPI tomorrow, pre-market. CPI, PPI, and so on. We have retail sales on Thursday, so there would be reasoning or a good enough context for something to go wrong. Now the market is actually sleeping on the tariff news. We had on Friday the Canada one, and over the weekend the EU one. That's why we're getting the slight drop from futures pre-market, but it's still basically any movement. And the market is betting a lot on the taco trade, but taco only works if there is reason to back down. If there is no reason to back down, Trump will not back down. And I don't see any type of deal like they need way more money from tariffs than they're currently collecting right now. And until Trump gets what he wants, I don't think he will back down, especially if the market just ignores the negative news from tariffs or the negative impact from tariffs. Because if these tariffs stay around here, the market's growth expectations will go down the drain. Like it's not going to happen. So that's kind of the conflicting situation right now. We have VIX going higher, we have market barely moving down, and it's pointing to something about to break, or this will break one way or the other. Maybe there's some de-escalation on tariffs and the market equities go higher, or maybe there's no de-escalation on tariffs and the equities have to go a bit lower. This also in the context of yields going higher once again, and market going up in spite of that, or not really going up, but not really going down either. So a complicated situation. Now going into the day-to-day trade. We didn't even reach 620, not on Friday and not today. This still looks kind of like where we are going right now, but from the short-term setup, I still think this plays out like this. I mean, meaning we go down, then we will have a bullish divergence here. We go up and potentially just a trend line or something like this from this trend line here. We retest this and maybe we go down below it and hit this 615. So this would be the minimum target I would be comfortable longing. Again, we'll see based on the context what the prints are tomorrow. I don't think this will happen today. Today should be more or less going sideways. I don't think there's going to be any front run. Like banks, if good bank earnings have already been front run, they will actually need to perform. For example, JPM broke to new all-time highs, did a slight pullback, but yeah, we are at new all-time highs and holding above those. So this front one already happened for banks over the past couple of weeks. Now they will have to deliver, and until we either get earnings or a good CPI print that the market likes, I don't think we can go significantly higher from this level. So I would expect we consolidate between like 623 and 620 today, and tomorrow we may get a breakout or breakdown depending on what the earnings are and the CPI print is. But most likely the CPI print is going to trump everything. We may get again, we may get something like good bank earnings, which will make DIA strong and potentially IWM strong, and everything else kind of drops. Everything else being mostly mega caps and tech in general. So that would be another situation where we have relative uh, rotation, and equities would SPY would not drop significantly, but maybe we get this 615 tag eventually, and that would could potentially be enough for this correction to stop. I was looking also at equal weight over. So this is RSP, which is equal SPX over SPX, and we are back at cycle lows. Uh, we've tested this low. This is the third time. I think it will hold, but my point that I'm trying to make with this one is that it's if equities go higher, it has to be through this uh, and more of a broadening of breadth than a narrowing and going back into mega caps because this would be more like a cycle top, maybe sometime at the end of the month, something like this. But if we get a breakout here, which would imply a rotation back into IWM into DIA, and this would require yields to top out as well and go back down because tariffs haven't translated into inflation. So this would be kind of the Goldilocks trade. But for this to happen, we need CPI not to spike, we need yields to go back down. And it's not just about CPI, it's also about the rhetoric of with firing J Powell. So they if Trump fires J Powell, maybe we get an overextension in yields going trying to do another breakout here, and it fails again, and we start going down. But from this is not a good look for equities. This is means narrow breadth and more concentration into mega caps. And what we need to see for a long-term bull is to see a break of this downtrend and start a new potential bull trend that goes higher, at least temporary, going back to a ratio of 3.17, hitting this AVWAP here would be very constructive for small cap because this is mostly small cap. And I saw something on Blue Sky today that looked interesting. Quickly, it's recent. So, oh yeah, this one. Large market speculator hedge fund, the most net short Russell 2000 futures in mid 2024. So a good CPI print that still doesn't show inflation coming through has the potential to spike small cap significantly because there's too much short on it, and it will be kind of a squeeze. But at the same time, a one that shows inflation coming back could really dump it because this positioning will become active. This is kind of like a passive positioning because it hasn't triggered. But if it goes lower, it triggers the momentum unwind because longs will be caught off guard and it could go back to the 205, something like this. So yeah, this is everything for this week. Hope it helps, although I don't think we have a lot of clarity of what's going on and where we're going at the moment. Have a good one. Bye bye.